June 2025 tax update. One big beautiful bill. They're calling it the One Big Beautiful Bill. And sure, it's packed with tax cuts, deductions, and plenty goodies that'll make most business owners nod their head in approval. But let's not kid ourselves. This isn't the bill that's going to balance the federal budget or magically erase the national debt. Nope. Macro-wise, we're probably still in the struggle bus. But micro-wise, there's gold in there for business owners who know how to plan ahead. So let's focus on what we can control, our own finances, our own strategies, and walk through what's in the Senate version, what changed since the House passed theirs, and what it means for you. Why it matters right now. Remember the Tax Cuts and Jobs Act, the big 2017 tax overhaul? Well, that starts unraveling at the end of 2025. The House passed their fix in May. Now the Senate has chimed in with their own take. And some of it aligns, but a lot of it doesn't. And time's ticking, because if they don't reconcile these versions fast, we could be headed for a chaotic snapback to pre-2018 tax law. And here's the kicker. They're using the budget reconciliation process, which means they only need 51 votes in the Senate. No filibuster-proof majority required. If the GOP stays united, they could pass this without a single Democratic vote. Bonus depreciation, back and bigger. Let's start with a big one. Bonus depreciation is back. The Senate version of the bill doesn't just extend it, it makes 100% expensing permanent for property acquired after January 19th, 2025. So whether you're buying new equipment, upgrading infrastructure, or investing in a commercial vehicle, you can expense the full cost immediately. But it's not just for manufacturers, distributors, or logistic companies. This is also a game changer for real estate investors. Think leasehold improvements, build-outs, and qualified improvement property, all eligible for full write-offs. If you own your own building and lease it back to your business, this is a tax planning goldmine. Add in cost segregation studies and you can unlock huge upfront deductions from what used to be slow drip depreciation. This is one of the most impactful provisions for both operators and property owners. QBID staying the same for now. Now on to QBID, the Qualified Business Income Deduction, under Section 199A of the Code. The House wants to juice this deduction up to 23%. The Senate, they're sticking with the original 20%. But honestly, that 3% difference, in most scenarios, it's marginal. What really matters is that both versions keep QBID alive. And that's a major win for business owners, especially those structured as S-Corps, partnerships, and sole props. The biggest concern is whether future changes could tighten eligibility or cap deductions. So while we celebrate that it's still here, let's also keep an eye on how the fine print could evolve. R&D credit write-offs, finally, some relief. And finally, some great news for R&D. The Senate version brings back full expensing for domestic research and experimental costs. Not only that, they allow retroactive deductions back to 2022 for small businesses under $31 million in annual revenue. This is a huge win for industries like software development, pharmaceuticals, biotech, and even architecture and engineering firms that rely on innovation. You no longer have to amortize over 5 years. You can expense it now and maybe even clean up on your prior tax returns. SALT deduction clash. And now for a big friction point, SALT deductions. The House version bumps the cap up to $40,000, which is finally a break for those in high tax states. But the Senate, sitting at $10,000. And honestly, this isn't a surprise for anyone because most Republican senators come from low tax states. So expanding the SALT deduction just isn't one of the priorities for them. That doesn't bode well for change. And there's another layer here. The Senate is also hinting at closing down the pass-through entity tax workarounds. That's where your S-Corp or partnership pays the state income tax on your behalf to preserve the federal deduction. If that gets tightened, it could hit business owners in high tax states twice. This is going to be one of the most intense and politically charged parts of the negotiation. Estate tax and long-term moves. Good news for those thinking long-term. Both bills agree on raising the estate tax exemption to $15 million and making it permanent. That's one less thing to argue over, and it's a win for those planning large wealth transfers. IRS and enforcement changes. Here's where it gets spicy. The Senate wants the IRS to start using artificial intelligence to identify and prevent fraud, specifically things like improper employee retention credit claims. But interestingly, they actually lowered the proposed penalty for ERC fraud. While the House version sets the penalties up to $200,000 per promoter, the Senate version brings that down to $1,000 per violation, though there's no cumulative amount. The Senate also joins the House in targeting direct file, calling for it to be shut down within 30 days of this bill's passing. Instead, they're proposing a public-private partnership model to replace it. Think more Intuit TurboTax and less IRS. If you've been wondering what the next version of the IRS looks like, here's a clue. Leaner, more tech-driven, and more connected to third-party platforms. Whether that's better or worse depends on how implementation shakes out. But one thing's for sure, enforcement is getting smarter and your margin for error is shrinking. Why July is the month to watch. Here's the pressure, and if you're watching this in July, we're already in the danger zone. Republicans gave themselves a July 4th deadline to get this bill to the president's desk. Why the rush? Because the US is closing in on its debt ceiling. Technically, they have until mid-July, but if this bill stalls, they'll need a separate one just to avoid default. That adds urgency and chaos to an already packed legislative calendar. Key takeaway for business owners. Bottom line, this Senate draft isn't the finish line, it's another lap in the race. Some key items look good for businesses, but until the House and Senate come to terms, don't set anything in stone and watch how this evolves. Stay ahead of the curve. Now's the time to plan, not panic. Meet with your CPA, revisit your strategy. In our previous videos, we've already covered the House's version for businesses and individuals, and this was the Senate's turn. And as this story continues to evolve, we'll keep breaking it down for you. So stay one step ahead. And if you want to talk strategy or just need help wrapping your head around how this bill might affect you, we're here to help for that too. You can schedule a call at www.tnvllp.com/tax-planning.